We are locking up. Oh, come out.
Please, sir.
We give you only 2 minutes more. 2 minutes. We are locking up.
Sir, please, I'm begging you. Please, you give us
Working with
space.
you when we're coming.
Okay.
As you can see, the heat is on. Yes, the heat is on. We do recall that 2 episodes ago, we brought you stories of enforcement exercises carried out by the FRS on alleged tax dodgers. The enforcement exercises have since continued across the land in keeping with the directives of the acting executive chairman of the FRS. On Friday the 17th and Tuesday the 21st of October 2014, Tax Matters witnessed enforcement exercises on not less than 5 companies in the Lagos area. We shall be bringing you sights and sounds from those enforcement exercises on this episode of the program. But before then, let's share with you the softer side of the FRS: enlightenment, education, persuasion, appeal. With me on the episode is Christina Pius.
Hello viewers, welcome to Tax Matters. Welcome once again. Today we are going on an educational voyage. Value-added tax is 20 years old in Nigeria, having been introduced with the enactment of the VAT Act 102 of 1993. Collection effectively began in 1994.
Withholding tax, on the other hand, is not a tax type in its own right. Rather, it is an advanced payment mechanism whereby a certain portion, a percentage of sums due to a vendor or a supplier, is deducted at source by the payer towards offsetting the income tax liability of the vendor at the end of the financial year. Withholding tax was introduced into the Nigerian tax system in the year 1977.
VAT and withholding tax come up regularly in business circles, especially where taxation is the topic. This is so because they are so germane to the smooth running of the system. Apart from playing their roles as taxpayers, organizations like government ministries, departments and agencies, and oil companies also act as collecting agents for VAT and withholding tax.
On this episode, we are going to share with you how the micro and small tax offices of the FRS in Ikeja and Onigbobo in Lagos and the large tax offices in Port Harcourt robbed mines and reminded hoteliers and oil companies as to their duties as agents of VAT and withholding tax collections.
Many taxpayers often like to believe that VAT is a multiple taxation. No, it is not. It is a multi-stage tax. And let me quickly explain what I mean by multi-stage. If I am a retailer, this is a bottle of bottled water, and the wholesaler sells it to me at 50 naira. 5% VAT on this is 2 naira 50 kobo. And it is added, it becomes 52 naira 50 kobo. I now retail this bottle at 100 naira, and I set my price at 100. I add 5% VAT, which makes it 105. Remember, I paid 52 naira 50 kobo to the wholesaler. I have collected 105 naira from the person that bought it. What I need to do is to remit to FRS 2 naira 50 kobo. The 5 naira VAT I collected on this minus the 2 naira 50 kobo VAT that I incurred on it. Because the wholesaler that sold it to me is expected to have remitted 2 naira 50 kobo to government. Now, for me, I have not suffered any VAT. And this is the misconception many people in the hospitality industry are having that we want to correct. You have not suffered any VAT. The person that suffered the VAT is who? The consumer. The person that bears the brunt is the person that consumed the water, not you.
There are 2 VAT rates in Nigeria, 5% and 0%. In the hospitality industry, 0% applies in some instances.
Zero-rated transactions are non-oil exports, goods and services purchased by diplomats, goods and services purchased by humanitarian donor-funded projects. What does that mean? Some of you may be lucky to have diplomats residing with you, and they say they are diplomats. What do you need to do? Let's have their identity. Let them pay without VAT. Have the identity, but you take a picture or a photostat of their passports, their diplomatic passports. Now, just attach that evidence with your returns. And VAT is always paid in the currency of transactions. If you charge in dollars, you must remit your VAT in dollars.
And this from the tax controller, Onigbobo.
VAT is a consumption tax. As he rightly said, it's not your money. You act as the agent of FIRS to collect this money from your customers and remit. Most times, most hoteliers do inform us that the customers, if you charge VAT, they will run. As such, they are not charging VAT. That is not what we are actually interested. You know what you do. You make sure you charge 5% of whatever service you are rendering.
In Port Harcourt, where the audience, or stakeholders if you like, were operators in the oil and gas industrial sector, VAT also came up prominently.
The VAT Act has actually provided specific compliance requirements from companies in the oil and gas sector. All companies doing business in Nigeria are expected to register in line with the law for VAT collection purposes. Previously, VAT registration certificates are usually issued by the FIRS, but in practice, it is understood that haven't applied for VAT registration and haven't gotten your tax identification number, that will equally serve as your VAT registration number. Next, we'll talk about source deduction of VAT. Now, this is a peculiarity with companies in the oil and gas industry, where they expressly permit such companies to withhold VAT at source. And also, NDAs, ministries, departments, and agencies are equally empowered to withhold VAT at source.
We move on to withholding tax, which is essentially an advance payment of income tax.
Yeah, okay. Yeah, waiting be this.
The deduction now for withholding tax.
Withholding guinea. Look, if you not pay me my correct money today, hey, Munu get me half for.
But madam, should be your company paying income tax.
Yes, that one na enough load for me to carry. Why in I won't come add join them again?
You see, withholding tax now advance payment for income tax. So when you do some kind job, like contract, we go remove small from them when we won't pay you.
I don't go contract am up. I bet tell me another.
No. We must pay the money to FIRS within 30 days, and they will give us withholding tax credit note to take show say you don't pay part of your income tax in advance.
So?
Now to help make the money where you go pay at the end of the year small.
So this withholding tax something, it be like part payment of one.
Exactly, madam.
I beg you, give me my check.
Remember, come collect your credit note.
Withholding tax, now for we own good. FIRS, it pays to pay your tax.
We're actually going to look at withholding taxes as it affects the hotel and tourism industry. There's no separate act for this industry, but there are peculiar issues. We look at the remittance schedule. One has deducted and one wants to remit. Good spirit. You have an amount and it relates to deductions pulled from about 12 beneficiaries. People whose money have been deducted. A schedule highlighting some essential details should follow, where you deal with items like name and address of agent, TIN of the agent. TIN is tax identification number. Name of beneficiary, TIN of the beneficiary. Why are we talking about name of beneficiary and TIN of beneficiary? The beneficiary is a major stakeholder in the money you have, which you are remitting as withholding tax. Something is going to come back to him by way of withholding tax credit notes. That is why the beneficiary has to be properly identified so that the system can cope with generating the effective credit notes for this same beneficiary.
We also, to ensure that deductions are made and remitted to FIRS as provided in the Act. Follow the template. Provide all the things therein are mandatory. Fill in all the information. Go to any of the collecting banks with a hard copy of the schedule and a soft copy, and ensure that you have your deposit slips. What we discovered is some of these bankers will have the deposit slip in their coffers, their normal paying slip. They'll come to your office. As an evidence that they collected your pay instrument from you, they'll fill out the deposit slip for you, and they'll go. Whatever, they won't post it. So please, if they give you a teller, ensure that you have the e-ticket within 48 hours of their collecting the instrument from you. You told the bank, if you cannot upload because of network challenges, notify FIRS and we'll be there to remedy it. And when you get your e-ticket, look at the date of posting. Ensure that it agrees with the date on the teller you have. Look at the number. The deposit slip have a number. Look at the number too, and ensure that the number of the deposit slip agrees with the number on the e-ticket you are receiving.
Now to matters arising.
The law requires remittance of VAT deducted within 21 days of after the end to which it relates. The fundamental question is that if sales were made on credits, to the extent that the taxpayer has not collected the proceeds of the sales from the buyer, where will the person get the money to pay within 21 days? The issue of withholding taxes, Section 81 of the CETA specifically provided for the utilization of withholding taxes. FIRS generates withholding tax credit notes. Without providing these withholding tax credit notes when you are filing returns, they will be disturbing you. This thing is equally in the portal in relation to the thing of that same taxpayer. Why are we creating administrative inconvenience? Because one of the fundamental tenets of taxation is convenience.
What is the Federal Inland Revenue is doing to protect somebody who they have deducted withholding tax from him and the person that deducted did not remit?
If a room is being given out to a guest, I know that is VAT, we charge VAT. That is VAT output. But I want to ask a question on VAT input. Like, when we purchase something like toiletries, we pay VAT on it. And that toiletries, without putting toiletries in the rooms, the guests will not take the room. And that forms part of our VAT input. And they say we are not going to claim it. I want you to explain it. Another question I want to ask is on purchase of goods from companies that doesn't have a vatable invoice, like drinks. Some of the distributors doesn't have a vatable invoice, and we buy from them. How are we going to claim our VAT input?
Withholding tax and VAT on payments, it is possible you do some jobs. Even hotels can get a contract. They do for some companies to house their staff. Hotels that service the airline industries and some specialized industries, they bring the staff in bulk and they pay. And when that company is paying, they will deduct VAT and also there will be the withholding tax elements. VAT is borne by the consumer.
Withholding tax is borne by the supplier or the provider of goods or service. They are two distinct arrangements. Let me now illustrate graphically. If you provide a service on contract of 200 naira, your invoice will show 200 naira plus 5% VAT, which is 210 naira. That is the invoice you are going to give your client. That is the VAT invoice. Let's assume the withholding tax rate is 10%. What is 10% of 200? It's 20. So the person paying you will deduct 10% of 200. So you are going to collect 180 plus 10 naira VAT. You will collect payment of 190 naira. You understand? It is very simple arithmetic. And when you now collect 190 naira, you know that 180 is your own. You remit 10 naira to FIRS. The 20 naira you have is claimable against your income tax. So it is not gone. What kind of relationship between expenses and VAT? Now, your expenses, that question is similar to the question Madam asked about room and toilet papers. All your expenses plus the VAT you incurred has been taken care of in the profit and loss account. For you to now claim VAT input on it, it's like you now want to cheat the government twice. Let me quickly now explain it with Madam's question. Providing a room is a service, is not a product. You rent it. The person is not going away with it. And he pays for the privilege of staying in that room. He does not own the room. All the other things you are putting are to make sure the service is conducive for him, which you expense. So there is no basis of input VAT for that. Purchase of goods from companies without VAT invoice. That means you don't want to claim anything. You don't want to claim any input VAT. If you go to a company with VAT invoice, then you can claim.
Mr. Amaramwachupu raised question of people who feel, taxpayers who feel deductions as source have satisfied the tax requirements. Yes, it has to a large extent taking care of the tax. But it still has to be packaged. You still have to take necessary care, manage his tax position, get evidence of his tax deducted as source, match it against his actual returns, verifiable returns, and get him certified and cleared by the tax authorities he's liable to.
How long does it take FIRS to get those withholding tax ready? So that when we go to our client and they tell us that the withholding tax is not ready, we'll know what to do. Then the third question is on VAT. VAT law says that oil companies should deduct VAT as source and remit. And there are companies also working for these oil companies. We have a particular client. Their VAT is being deducted from them at source. And they equally deduct from other companies at source. But the problem we have there is that FIRS insists on them remitting that VAT they deducted instead of allowing them to offset it against the VAT deducted from them at source. And that, I feel, amounts to double taxation.
I am asking if purchases off the shelf without LPO contract terms are liable for withholding tax.
What is the lifespan of a credit note to be used to offset credit liability? FRS requiring companies to remit VAT already deducted by oil and gas companies. I think what I have to say here is the fact that if you are faced with that situation, you are at liberty to request from the entity that made the deduction evidence of of remittance, and that will usually suffice.
Across-the-counter transactions are not liable to withholding tax.
How long does it take for credit notes and receipts to be ready? All things being equal, within 1 month of remittance, the receipts and credit notes should be ready for collection in our office. If you come on the date of payment, 1 month highest, the credit notes and receipts should be ready.
I'm happy to inform you that very soon you will have access to be printing your credit notes and your receipts online.
Thank you, Christina. Now, when persuasion fails, when education fails, when gentle nudge fails, what do?
What is voluntary compliance all about? Voluntary compliance. We expect you to comply to the tax laws. We expect you to walk to the tax office, report your income, and pay what you have computed as your tax. The RC just mentioned that the executive chairman directed that offices should move into compliance enforcement. Why are we moving into that? It is because the taxpayers have failed to take advantage of the compliance support that FRS put in place. I want to plead with you to please take advantage of all these support, compliance support packages, because if we decide to apply all the compliance enforcement, it will affect our businesses. You agree with me? Because by the time FRS come to your office, you have to set aside all businesses and then attend to them. And it is because you have failed to comply voluntarily. If you have challenges, the Taxpayer Service Department is there. We have complaints line, telephone lines, where you can pick up and call us. Let us know the challenges you are having with any of our offices. I'm telling you, management is ready to deal with any officer who stand on the part of efficient service delivery. You can call us. We have email addresses. You can use any of the platform and reach us. We are ready to take up your cause. Apart from that, that's the first level complaint. We have Servicom. If you call us and we fail to address your issue, Servicom is there. It's a watchdog. You can further report your case. They will take it up for you.
And that was exactly what happened. Work came to a halt. Sales stopped. Hell was let loose at a popular electronics and furniture shopping plaza on Victoria Island in Lagos when enforcement officers of the FRS came calling on Friday the 17th of October 2014. What was the charge? Failure to file annual tax returns, failure to file monthly VAT returns, and failure to remit millions of naira collected as VAT from buyers who come in their hundreds on a daily basis. The owners of the shop played hide and seek until the officers of the FRS had to shut down the shopping complex momentarily. Reason later prevailed, and shoppers and staffers alike were led back in after the tax consultant of the shopping plaza offered to follow the FRS team to the Lagos headquarters annex. The story was the same at the Ikeja office of a popular cement manufacturer, where a commitment was made to attend a meeting on the following Monday. The company has since paid 200 million naira in back taxes. At the third company, the story was pretty much the same. Staffers of the company were taken away for discussions by the FRS enforcement team.
On Tuesday, 21st October, 3 companies were enforced. At the first company, the chief executives were not on seats. The FRS therefore went away with a representative of the legal department and the finance department. The story was the same at the second company visited, where the head of the finance department was taken away. The head of human resources joined him later at the FRS Lagos headquarters annex. The story got interesting at the third company, where only the sales boy was available. According to the FIRS, the company had not been filing annual tax returns and the sales boy had been refusing to accept correspondences from the FIRS. The sales boy was taken away.
Very embarrassing.
Yes.
But you know you can avoid this embarrassment. You can ensure that your business runs smoothly by simply doing what is required of you at the right time. The first step, acquire TIN, taxpayer identification number, by simply visiting the closest office of the FIRS to you, and it is free. Keep simple records of your business, simple income and expenditure records backed by receipts. Get a qualified accountant to audit your accounts and secure the services of a tax practitioner to compute your tax liabilities under the self-assessment regime. You know your business, you know how much you make, you know how the business runs. Self-assess yourself. At the end of 6 months, 6 months after the end of your accounting year, file your annual company's income tax returns. Accompany it with payment of the amount that you have determined by yourself that you are due to pay as taxes. As simple as that. Chikena.
That's all.
That's all.
Bye for now. Thank you for watching.